Hello, everybody. How we doing today? So, in a real estate market brimming with sky-high prices and soaring rates, where does the forward-thinking investor turn? Well, enter the groundbreaking world of tokenization and fractionalization. Today, we're going to be chatting with a trailblazer in this new innovative technology that will forever change how assets are bought and sold. And if you've ever wondered how blockchain technology might revolutionize the way we invest in properties, making it accessible and diversified, then this is the episode that you've been waiting for. So whether you're a seasoned investor or just venturing into real estate, the future is here, and my next guest is going to help us navigate it. But first, my name is Mike Mills, and this is the Texas Real Estate and Finance Podcast. I have 13 years under my belt as a mortgage loan originator, and I've seen just about everything you can imagine when it comes to all things real estate and finance. And every week, I want to bring you perspectives from leading professionals in the real estate space, from spotlight interviews to top-tier agents to new innovations coming down the pipe that will potentially revolutionize the way we do business. If you tune in each week, whether you're a seasoned pro or someone who's simply fascinated by the real estate market, this podcast will ensure that you stay informed, innovative, and always a step ahead of your competition. But before we dive in, quick little reminder to all my listeners, if you're finding value in these episodes, please hit the follow or subscribe button on Spotify or Apple so you never miss a new podcast. And for all the full episode experience, make sure you check out and subscribe to my YouTube page at Mike Mills Mortgage and Finance. And your support kind of keeps this thing going and helps me bring more enriching content. I can't speak today, week after week. All right, so let's get started. So today we're honored to have a pioneer at the intersection of blockchain, crypto, and the state of Texas. Lee Bratcher is the driving force behind the Texas Blockchain Council, an association championing the interest of its members and striving to position Texas at the forefront of Bitcoin, blockchain, and digital assets globally. Lee doesn't just talk the walk; he actively advocates at the Texas legislature, ensuring interests of the blockchain and crypto community are represented. And today, he's here to shed light on the latest legislative moves and their potential ripple effects on real estate and its investors. So, welcome to the show, Mr. Lee. How you doing, sir?
I'm doing well, Mike. Thanks for having me on.
Sorry, you got to go through all that intro stuff getting into it. So it's just the way this stuff works. But I really appreciate you stopping by. This is a topic that I have a lot of interest in simply because the world's changing, and I'm a big believer in you gotta adapt with it or kind of get left behind. So that's what we're kind of trying to do here. But before we get into everything about the Texas Blockchain Council, I want to start with just you. My question is how does a U.S. Army captain and former police officer find himself as a leading advocate for blockchain technology in the state of Texas? How did we get here, man?
That's a great question. Jack of all trades, master of none, right?
There you go.
I was in the military. I still am an Army reservist, serve as a innovation officer for the 75th Innovation Command, which supports Army Futures Command. But my full-time job and the thing that I did the longest in my career was as a political science professor. I researched property rights and taught here in the DFW area at Dallas Baptist University.
Okay.
And it was in my research. So about 2015, I was up at the Army War College, actually there on an academic assignment, studying property rights. And I discovered the Bitcoin white paper and discovered blockchain and property rights and the combination of those two. If there's a lot of research out there that shows if people are secure in their property rights, their physical property rights, their real property, then those communities will flourish. They're less likely to join insurgencies or other kind of conflict. It's been an institution that has served the West well for centuries, and we've got incredible institutions of property rights in the U.S. and the rest of the Western democracies. And so when I discovered digital property rights and how Bitcoin was the first really iteration of solidifying digital property rights in the way that it does, and how we can use the technology that was built with the Bitcoin white paper, blockchain technology, to secure property rights in other areas, both digitally and in the real world, that's when I got hooked. And so I started the Texas Blockchain Council a few years after that while I was still a political science professor. And then very quickly thereafter realized this was going to take a lot of work and I needed to leave my job as a political science professor and run the Texas Blockchain Council full time.
Yeah, it's certainly a full-time gig. You're not just doing things from time to time with that. I see you're pretty involved all across the state for different advocacy groups, talking to different people. Obviously, you're spending some time to chat with me for a little bit, so I appreciate that. But okay, so on the Blockchain Council itself, so in your own words, basically, what role is the Texas Blockchain Council playing in helping spread the word about blockchain and what it's capable of? What are you guys doing on a day-to-day, month-to-month, year-to-year basis, really kind of getting the word out so everybody understands? Because I think the big separation, especially right now, is, from the general public at least, understanding the technology and what it's actually capable of. So what are you guys doing to promote that?
Yeah, it's really tough. You're right, because there are so many different nuances here, and there's different verticals within blockchain technology. You have Bitcoin and other permissionless cryptocurrencies. You have enterprise blockchain. You have tokenization of real world assets, which typically runs on public blockchains, permissionless blockchains. So it's really not something that is easily grasped with just a phrase or a meme or something. You really have to do a lot of education. So we end up doing exactly that. A lot of education for elected officials and staffers, and that's typically down at the Capitol in Austin, webinars, in-person lunch and learns. Then we put on networking events throughout Texas and Dallas, Houston, and Austin. We had you out at Tokenization of Real Estate event recently up in Frisco, and that was a great time. So we end up doing a lot of education, and it's mostly because everybody has heard of blockchain, or they heard of crypto, or they've heard of these different things, but very few people have actually took the time to understand the nuances there. And so because some of these things are quite different, like even Bitcoin and Ethereum are quite different.
Yep.
But most people would just say, "Oh yeah, those are cryptocurrencies." But in our world, they're totally different. Like Bitcoin and Ethereum are solving completely different problems.
Right.
But then you have other verticals like tokenization of real world assets, including real estate, that's different from those. So that is the challenge.
Well,
Yeah, go ahead.
you guys are so there's been a couple things, something that I don't know if I'm sure you saw this, but just day before yesterday, I believe, Citigroup came out and announced that they were doing digital deposits, essentially. So they could take your deposits and convert them into tokens on their internal blockchain, essentially, allowing for transfers globally with very little cost and very quickly, which is, primarily the biggest advantage when it comes to finance on the side of is the amount of time that it takes. It doesn't take any time at all, and the cost is minimal for this type of stuff. And then you have, companies like BlackRock and Invesco and Fidelity getting into applying for spot ETFs for Bitcoin as well. So just within the last month or so, there's been a lot of movement in this area. Why do you think, within the past 12 months, you've seen so much what I would call like institutional entities really kind of getting into the game now, when it's been, this technology's been around since, what was it, 2008 when Satoshi wrote his paper? Is that when it was?
That's when it was. Yeah, the first transaction was 2000 or January 2009, but the paper was written in 2008. You're correct. And I think it's really around the institutions. First of all, a lot of the brand risk that was there several years ago is no longer there. Unfortunately,
When you say brand risk, do you mean because of the stigma attached to the crypto bros or whatever world? Okay.
Yeah. Yeah. And unfortunately, Sam Bankman-Fried and FTX did not help us there. They was a big reputational hit to the
Sure.
industry. But just like we didn't stop trading energy derivatives when Enron
Right.
went down, we're not going to stop with this technology because there was a bad actor who did something that was, um, complete theft and inexcusable. We are seeing the fact that institutions are understanding the differences here. So, point in case, the Citigroup thing that you mentioned, and also JP Morgan, they
Yes.
both use internal blockchains for internal settlement, and those are private permission blockchains. That's a totally different thing than a Bitcoin ETF. So
Right.
you could have BlackRock, which has applied for a Bitcoin spot ETF, and we'll probably get it within the next couple months, along with all the other ETF applications. The SEC is going to approve them all at the same time in all likelihood. That is, they're capable of holding that in one hand, but then also on the other hand, grasping an internal blockchain that increases their transaction speed on the back end of these banking ledgers, which really those can't be public and permissionless because they don't function the same way as a public permission blockchain like Bitcoin.
Right.
So you're really just using that in a consortium of banks, or even within one really big bank like Citigroup, for them to settle all of their internal transactions with zero friction is a pretty interesting concept. Or then a consortium of banks to settle all of their transactions is sort of similar to like FedNow, sort of a step beyond FedNow. FedNow is like real-time ACH. So a step beyond FedNow would be like banks using an internal stable coin, if you will, or tokenized deposits to settle. Mm-hmm. And then a step beyond that is a central bank digital currency, where the federal government is then issuing digital dollars on blockchain rails to banks for them to utilize. Now,
on that real quick, there's a lot of, in the crypto world, there's a ton of people on both sides of the fence there on the CBDC. So where do you how do you feel about that? What are the positives and negatives? Because essentially you're talking about a digital currency controlled by the central bank, which, depending on how you look at it, can have some positives and negatives. So where do you kind of fall on that?
We are firmly opposed at the Texas Blockchain Council. So, and we think the most people that we interact with are also opposed.
Right.
It is not the right direction for the U.S., for any country really that believes in privacy and freedom, the principles that our nation has been built on.
Yeah.
It works great for China and for authoritarian regimes, and it's unfortunate for the people that are being forced to use it there because their freedoms are being inhibited. Their social credit scores are being dinged whenever they spend digital yuan on some product that the government doesn't deem as a worthwhile investment. So we're opposed, but I will say here's some more nuance. Unfortunately, I hate to be bringing in all this nuance, but there is definitely a need for tokenized U.S. dollar deposits. Okay. So we would say that for the Federal Reserve, for the central bank digital currency, that is privacy problematic. So for them to issue that directly to the U.S. citizen and to a consumer, that's a problem for privacy and freedom, right? That's the Chinese model. For a bank to tokenize U.S. deposits, that is no different than what we have today, and only using the blockchain rails for quicker movement. So we're not opposed to that.
Because just like what your bank deposits are basically, digital as it is right now. I mean,
exactly.
You're not walking around with exact cash. Yeah.
And there are enough firewalls in place currently between the end user, the bank, before you get to like complete surveillance by the Fed.
Yes.
So we're supportive of that. We're certainly supportive of privately issued stable coins like USDC, mm-hmm. which is issued by Circle. There's $120 billion of US dollars locked up in stable coins globally. 99% of dollars are backed by US dollars. The other 1% are backed by gold or euros, right? So this is a way for the dollar to prolong itself as the world's reserve currency. What if there's 10 trillion stable dollars worth of stable coins 5 years from now, right? It's grown from 0 to 120 billion in like 3-4 years.
Right.
So it's grown quite rapidly. And we think that this is really healthy for the US dollar, really healthy for, honestly, US debt, because these stablecoin issuers are forced buyers of US treasuries. Because what they do is, for your listeners that aren't familiar with stablecoins, if I want Circle USDC, I'll take my dollar, say I'm taking $1,000 US dollars, and I'm going to send that to Circle. They're going to put that money in Bank of New York Mellon or somewhere, some institution, or some sort of money market fund. and they're going to issue me an equivalent number of USDC. So if I ever need to redeem that USDC for those US dollars, I can do that at a later date. But then I have $10,000 of USDC that I can use on the internet to close a transaction in Italy, maybe a banking transaction with a business partner that normally I would have to send a wire for that costs $30, that takes, X amount of days. ACHs are much cheaper, but those don't work as well internationally. So you can actually clear those transactions in seconds for just pennies of a transaction cost. So on the back end, those dollars are being invested in US treasuries while, it's either held in cash, US dollars, or in treasury bills. So that way, when I come to redeem it, there is enough dollars there to redeem, the 10,000 that I put in. And so long story short, it makes them a forced buyer of US treasuries. Well, we want people buying US debt right now because our debt servicing costs in this country are ballooning out of control.
Yes.
So that's a long rant about the stablecoin issue. I think it is important that we have tokenized deposits. It's just, unfortunately, it's not as easy as they're good or bad. It's just, you have to dig into these different areas. So it's sort of on a spectrum, like central bank digital currency on the far end that's concerning from a privacy and freedom perspective and surveillance. And then you get to tokenized deposits, you get to privately issued stable coins, and then you get to Bitcoin on the other end, which is completely permissionless and privacy enhancing. But it may be, and I'm a big believer in Bitcoin, but it's not necessarily the only thing, the only digital asset. We have to have tokenized dollar deposits too, because the dollar remains the primary currency for certainly us as Americans, but also the world. And we want to make sure that it stays that way, because if it doesn't, our debt servicing costs will go from really bad to catastrophic. Because if we can't borrow in dollars, I mean, the US would go bankrupt almost immediately, within months.
Yeah. Well, we're having issues. I mean, obviously I'm in the mortgage world. So, with especially within the last day or so, when the Fed came out and basically said they were pausing on the rates, but they also were very hawkish going forward, saying that they're expecting one more possibly this year, which has caused the bond market to go crazy with the amount of debt we've been issuing lately. The 10-year treasury yields are way up. So, there's all kinds of issues that are affecting all walks of the economy. And, one of the, I think, big benefits right now, especially when you look at stablecoins like you brought up, is that with the rates being so high as they are, there's lots of incentives now for banks to hold your money. So if you want to deposit your cash with, say, like a Coinbase or somebody like that, and hold your cash in USDC versus dollars, you can get 5%. They're offering 5% on your money right now. So if you're holding your cash there versus holding it in your savings account with Bank of America, who's offering you nothing, then you can get a rate of return on that money in somewhere else that's a little less risky than, say, sticking it in the stock market and betting on something that could, come tumbling down here in the near future. So I think there's a lot of avenues for people to start, educating themselves and getting involved with this, because the thing that I've been harping on for the last several months is, whether or not you understand this technology or whether or not you think it's something that is going to be a long-term beneficial thing for you or anybody else, it's coming. I mean, it's not even coming, it's here. And you have to really, get into it, because this is what is going to be the driving force behind how finance is handled, going into the future, until something else changes. So the old days of doing things are kind of past us, and, people need to start really figuring out how this stuff works, where it's going to affect them and how it's going to benefit them or affect them negatively, depending on how you look at it. Just like with any other issue, like you said, there's a spectrum of, you've got the far side of USD or CBDCs, which, I'm right there with you. The privacy of that issue is a big concern for me. And then you've got the far side of it, which is Bitcoin, which is completely open, that has an immutable ledger that anybody can see, that's very, very secure. So, it's nuanced, just like any other topic when it comes to anything in this country. So, getting on the topic of real estate specifically, from your point of view, what's some of the most significant benefits that we can ultimately bring to real estate transactions when it comes to blockchain and everything behind it?
Yeah, I think in the real estate world, there's two areas of promise. And one I think is on us now, and one is going to be years out, right? So the one that's on us now is tokenized equity. So that's with LPs being able to enter and leave positions in real estate with the same kind of liquidity that we see in public markets, like the same kind of liquidity that we see with Apple or Google stock. We will soon be able to do that with real estate projects that are tokenized. So you'll be able to buy a portion of an asset that's been tokenized. The cap table is tokenized. All the LPs or interests are tokenized, and therefore they can trade these tokenized securities on securities exchanges, either a national securities exchange or an ATS, otherwise known as an alternative trading system. So that's here, and there's already buildings in Texas that are being tokenized, and many throughout the world. It really won't make a big dent into I think your listeners' lives until like some meaningful percentage of buildings and or commercial real estate and residential real estate is tokenized. Right now, it's far less than 1%. Right, it's
Right.
a percentage of a percent. But if we get to 5% of all real estate globally being tokenized, that makes a big difference. And if people are able to say, hey, I've got a 10% position, I'm one of the LPs into this development over here, and it's halfway built, it's going great. Maybe I invested when it was a high risk, now it's just moderate risk. And my assets appreciated. There's real time price discovery because there's trading, there's trading in and out of these positions. And I needed some liquidity. I could sell some portion of my ownership on a secondary market, use that money to do what I needed to, and then maybe I come back into it. Maybe I don't.
You don't have to unload an entire property. You can
Yeah,
unload a piece of it because you only own a piece of it.
exactly.
Right.
And there's also a lot of interesting instruments, like on the debt side, when you had that kind of collateralizability for an asset.
Mhm.
Real estate's the best collateral, as you know, of any asset in the
Right.
world.
Right.
With tokenized real estate, you have an additional layer of ease when it comes to using that as collateral. So you could even, instead of sell it, maybe you have a capital gains and you're like, hey, I was an early investor in this development. It's now an income producing property. The property, it's been completed. There's tenants, and my investment has appreciated X percentage. I have a pretty big capital gains liability. I'm sure a lot of your listeners have great tax strategies. There's a million different great real estate tax strategies, but how much easier would it be if you could just immediately use that token to get collateral for your investment without selling it, without incurring a capital gains liability? But that happens on some sort of automated liquidity pool where someone's able to like instantly recognize that collateral ability and give you a flash loan within like 5 minutes.
So you're basically saying that not only do we have the actual asset, the hard asset itself as the building as part of the collateral, but then the token itself that you own related to the equity or the cash flow of that can also be some sort of collateralized asset to where you can borrow against that token too if you need quick cash to do anything, right?
That's right.
So there's different layers to it.
Yeah, and essentially it would be the same thing. I mean, it would be you're just borrowing against the equity that you
Sure.
own in the and I guess that does include
It's like holding a
cash.
stock. You're borrowing against a stock in a company. The company is the back, is the collateral part of the stock. But then if you want to borrow against your shares in that company, it's the same idea, right?
Yeah. Yeah. And certainly that happens now. But what we're talking about is a much more granular scale, like
Right.
a small time investor, maybe one of the smaller LPs in this project is able to get that kind of liquidity in like 5 minutes where they, they're on a platform. The algorithm automatically recognizes the value of this asset. They can verify it instantaneously on the blockchain.
Right.
And, it's programmed to provide some sort of loan at a certain percentage within just a few minutes.
There's a lot of concern right now in the commercial real estate space because you have, and I think it's only in one sector specifically with the retail office space, because warehouses are doing great. Apartments, and that kind of thing are doing well. They've kind of slowed some of the construction because I think they're under the idea that they're almost overbuilding at this point, which is not a bad thing. We could use a little oversupply on housing to bring some of the costs down. But But when you look at commercial real estate on the retail side with these big buildings, especially in large metropolitan areas, California is having a really hard time with things right now. I know New York's dealing with some issues with downtown office space. Could you ever see a situation, or do you think there's a mechanism where the debt, because you're looking at these small banks, these small regional banks that are holding these loans, and they're going to reset because, commercial real estate typically turns over every few years and resets the rate. Is there a place where this fractionalization could become a liquidity, solution for some of these either small banks or investors that are holding these big loans at these low rates that are going to reset, that they're not going to be able to really handle the cash flow, at least in the short term? Because just like anything else, the market's going to turn around. We're in a bad spot right now to some degree, but I think there's a lot of hope for the future. But do you think that there's a place where the fractionalization could bridge a gap between these financing situations where these small banks aren't willing or aren't able, to hold those, and then the investors are also looking for a place to park that debt at a more reasonable cost?
I'd probably defer to real estate professionals on that question, but I will say, just from studying economics, that when there is inefficient allocation of capital, if you're able to get more granular, the market will, it's like water flowing, downstream, right? The market will flow and provide opportunities for those, for people seeking yield in that way. And I think the only thing that's going to perhaps be be sort of an obstacle or hindrance there is, you're going to have higher interest rates on those kinds of,
Sure.
in the near term, right? So it might require the debtor to swallow a larger or a higher interest rate in the near term for them to, be comfortable there. But I think if there's a market to be made, and this technology allows for more fractionalization and granularity there, I do think it could be a potential bridge. And not to say that would be detrimental to institutional lenders like regional banks that do have a significant part of their portfolio in real estate debt. That's probably going to remain like the gold standard for decades, right?
Yeah.
It's just another option that provides a little bit more competition in the lending space.
So let's look at now with the blockchain associated to title. And I actually, you and I kind of briefly chatted about this before, but do you think that blockchain has the capability of streamlining the title transfer process? And then how do you think that would look in practice if it actually did get to that point? I know regulation is a big piece of this, it just plays a role in all of this, which is what you guys are fighting the good fight on every day. But what do you see as far as the benefits of the technology when it comes to title transfers?
Yeah, Mike, that was the other thing that I was going to say. I said two things: one that's market driven, and the other use case for blockchain and real estate is exactly that. It's ownership transfer, it's title transfer. But that one's the one that I think is a long ways out,
Right.
and it's for the reason that you mentioned. It's governments are not incentivized to innovate. And that's okay. The private sector innovates, and the government, that's just not what the government's built to do.
Right.
The government solves other collective action problems. So I don't think we're going to see title, especially here in Texas, just because of the way that title has evolved here. It's highly regulated. The 254 counties in Texas, the county clerks and the land administration offices at the counties really have a lot of control over that process. And I just don't see enough political momentum.
Money.
Money, political momentum building. And I also see the title industry sort of resisting it. And if the title industry resists it, then probably not going to happen anytime soon. I think what we will see, I think the only reason that we will eventually get to a parallel system where title is also on blockchain, because you're going to have to run a parallel system for years before you move fully to a blockchain title system. So you'll have your existing software, the title plants, the way they do it now. They may have, an imaging system. They may have a hard copy. They probably have different counties do it different ways, and different title plants do it different ways. But you have definitely duplicate multiple sources of validity or multiple sources of truth. And so you got to run a parallel blockchain. So you add on a little expense in the short term,
Right.
and before you can drop off some of those duplicative efforts on the back end. And so, the title companies, the title plants that adopt this technology, I think will eventually gain market share. But that's probably 10 years off.
Will you explain, just so everybody be aware, what does that actually look like? Why is blockchain a useful technology when it comes to title transfers?
Sure. It's really truly what a blockchain is designed to do. So at its very core, blockchains are distributed digital ledgers. They're ledgers that track asset ownership. So title systems have developed for centuries around this idea that you have to have surety of title, and we have a really great title system here in Texas and the U.S. as a whole. It may not be as efficient as it could be, but that doesn't mean that it's not been an absolutely transformative and beneficial thing for us as a nation. So what blockchain can come alongside title and do is provide the ledger by which assets move. So the way that it works, you would have, say, a title is hashed onto the blockchain. And when that hash is complete, it's added to all of the other transactions in the chain. And that new hash is verifiable in such a way that if you were to try to even change one comma, one like longitudinal line on any sort of survey or any sort of title document, any pixel actually even that is changed on this document would actually break the hash. And so if you've done that, then it's rejected and not added to the chain. So the only documents pertaining to title on the chain are ones that are verifiably true and accurate to all the other actors in the blockchain, whether it's permission blockchain or a permissionless one. So you can have a title transfer, and then the next time that title is transferred, you really wouldn't need an insurance policy to, title insurance
policy is the ledger. It's there,
the ledger, and you can instantly verify that, okay, a pixel, a comma, a zero, a nothing has changed on this document from the last time that it was entered. And we're gonna update it now with public-private key cryptography, such that the seller is going to verify this transaction with their private key. That asset is then going to be transitioned over to a buyer, probably through some sort of escrow process or county, governmental entity.
Right.
And then the buyer then holds the private key to that title that demonstrates ownership in that property. So it's again, lots of different things would need to happen between where we are now and where we're going. And I also want to, reassert that I don't think this means that title insurance is going away anytime soon.
Right.
Maybe by the time that I have grandkids.
Right. Yeah. We're a long way away.
Yeah. My kids are like in elementary school right now. So
yeah.
For the listener that's not watching, right? So
yeah.
We are decades away from not needing title insurance, if ever. I mean, maybe we even still have title insurance, but the policy premiums are
a lot cheaper.
They're cheaper. And obviously we have regulated title based on a formula right now. I think that's got to change personally.
What do you mean? Because you don't think it should be based off title companies' expenses?
Right. Yeah. We've got to let the market act a little bit more. Like, for example, I think it was in Ohio or Indiana or something. They were averaging like a title insurance policy for a $250,000 home for less than $1,000. It was just a few $100s for their and the premium or the the liability, I guess, to the broker that under the underwriter was, negligible, right? It was like $80 worth of their liability as an underwriter. So it is pretty out of whack.
Yeah, it's antiquated, but I'm sure with all your experience working with the legislature in Texas, you understand better than anybody how slow things move and how difficult it is to usurp a current method of doing something. It's very challenging, especially when there's good money to be made. It makes it even harder. And that's kind of the situation. But are you aware of any other specific real estate projects or pilot programs in Texas that are using blockchains, or that they're doing something new that we're not aware of right now?
Yeah, well, I know Market Space Capital has tokenized commercial real estate property off of 635 and where is that? It's in Dallas off of 635, and I want to say near Marsh Lane.
Okay.
Red Swan has tokenized some properties in Houston. Some of these there's a few properties trading on some of these ATSs. The real challenge for the vision of tokenized real estate is liquidity.
Right.
And that's because there are multiple ATSs and there's not enough liquidity on any of them individually.
Right. Because you don't have enough people bought in yet. So if you don't have enough people bought in, then you're not going to have a big pool of money to spread around.
Correct.
Right.
Yeah, there's not enough liquidity on any of these platforms to really create an efficient market.
Yeah.
So if we had some sort of national securities exchange for real estate, similar to, that would act in a similar way to, say, the New York Stock Exchange or NASDAQ, that is really, I think, where we need to go is one national securities exchange where real estate security tokens trade.
Right.
And maybe other kinds of private equity can trade there as well, right? It's just non-public security tokens.
I don't know the history of it specifically, but obviously they had the NASDAQ, or that NASDAQ came along, after the New York Stock Exchange was up and running, and then they started. Do you know how they went from basically not existing to is there certain types of licenses they have to acquire? I mean, how does that? Do you know how that works?
Not exactly. I do know there are a lot of licenses, and I do know that there are more than 15 national securities exchanges in the public markets.
Okay.
So I think what will be required is one of those, like New York Stock Exchange or NASDAQ or some of the smaller ones, right? Those are the two that we know the most. Some of the smaller ones to retrain their licenses and acquire additional licenses for private market securities exchanges. And right now there are ATSs that I mentioned that do sort of serve that function in a more limited way, but you're only allowed to trade on that platform with those assets that are listed on that platform. And some assets are restricted to accredited investors only if it's a Reg D exemption. Some assets, maybe there's like a Reg A exemption. And it could be for not accredited investors, but you have to do a ton of investor education on the Reg A offerings. So it's clunky, and so it is all regulatory challenges that are slowing it down. But I think it's taking the natural course, right? We can't just jump into this too quickly because there are investor protections for a reason.
Sure.
So I would expect either one of these ATSs acquires the licenses required for a national securities exchange for private equity, mainly real estate, or you see one of the public exchanges dive into it.
So if you're looking long-term at this, now, at least right now, I think there will be, or there are currently options where from individual home ownership, where you can, if you have crypto assets, you can actually leverage those. There are companies that are doing lending based off of whatever assets you own. Obviously it's a percentage of it, just like anything else. And the regular, Fannie Mae, Freddie Mac, FHA type loans that we do every day, we can use crypto assets as verifiable assets to be used in the transaction. They have to convert them, just like anything else. But so the wheels are starting to move in that direction. Now, I don't know of anything right now that's going to solve the issue that we have with the cost of buying a home right now. Interest rates aside, somebody told me the other day I was living when they were selling interest rates at 18%. And I said, yes, that's true. But in 1970 or 1982, when that was, the average price of a home was $70,000. Nowadays, the average price of a home in the US is somewhere around $350,000. So it's substantially higher, which makes the cost of home ownership kind of out of reach for a lot of people, at least right now. So we're not going to solve that problem, at least not in any way that I'm aware of with blockchain. However, the idea of investing in real estate is something that for a very long time was only left to those who had the cash. If you had money, a lot of money, if you want to get into a syndicate and do investment in, commercial properties, you had to have 100,000, 50,000, whatever. Do you think that this fractionalization, change in how real estate investing is happening, is that going to more democratize at the lower level for investors to be able to get into the game? I always equate it to kind of what Robinhood did with stocks, because that's essentially what they did. Is they, one Apple stock price might be $350, and maybe you don't have enough money to buy one, but you could buy 5% of that one stock. And that's what, kind of Robinhood did. And then you saw, obviously during COVID, for a lot of different reasons, but then you see the stock market explode because now there's all this other money that's coming in from the smaller guys, maybe $100, $200, $400 here or there instead of hundreds of thousands. But do you think, or how long do you think it would take for that shift to start occurring, when you look at commercial real estate or just real estate investing in general? Because I do know there are a few platforms out there that are doing investing on single family homes as either, rental properties or a rental portfolio and that kind of thing. So what are your thoughts on that?
I think we're seeing it. Fundrise has an offering like that. I don't know what their minimum investment is, but it's quite low.
Yeah.
There are challenges with securities law there around non-accredited investors, but you can create Reg A offerings for non-accredited investors, and you can have a certain percentage of your investor class be non-accredited. So I do think eventually, it is the goal of several of these companies like Proppy, like Peter Rex's company, Rex down in Austin. They want to get a minimum investment in a real estate asset down to $1.
Mm-hmm.
So similar to what Robinhood did for stocks. Your example is very poignant. I think it is very expensive and cost prohibitive to do Reg A securities offerings. So you have to have a large enough asset, or the cost of capital has to be high enough, which it is right now, right? Cost of capital
Sure.
is really high right now to really make the business model work, to do something like that, rather than just take a big syndication with accredited investors and do a Reg D and just, have very low compliance costs and all that stuff.
Mm-hmm.
So it doesn't pencil out on those projects. And it certainly doesn't pencil out on like a residential home. But I do think that we are moving in a direction where it will. And so, as I said, on the title side, I do think we'll get down to $1, minimum investment for accredited and non-accredited investors. You probably have to have an interesting strategy where you have like a parent Reg A that has, subsidiary Reg A's under it, and that's how you make it economical to have smaller, lower dollar value assets that are available to non-accredited investors.
It'd be almost something like investing in like a REIT or something along those lines, where it's multiple properties that are held under one entity, and then you've tokenized that.
Well, it would be similar to a REIT, but different in two ways. One, the fees would be much lower, right? Because REITs already exist and people can already invest in REITs.
Sure.
So you'd have to have lower fees to compete away the dollars that are investing in REITs currently.
Right.
Two, you'd actually have ownership. So correct me if I'm wrong, but if I own, like I go to my Charles Schwab account, I own a REIT in there. I don't actually own that I'm not like one of the owners of that asset in the truest sense of the word, right?
Right.
I
You're just
own
an
a REIT that
investor.
owns the asset.
Right.
So I couldn't take out that's not mine to dispose of as I see fit. That's the
Gotcha.
REIT's. So it would be different in that sense, in that in this case, you would actually own X percentage of the asset. You could use it as collateral. You could, sell it. You have capital gains liabilities, all that stuff, and you can participate in the ownership of it. So a lot of these, one of the interesting things about this is most of these properties are not tokenizing all of the asset, because then you have to have a very creative operating agreement for
Right.
the investors. And if the GP doesn't control sufficient amount of the property, then the operating agreement gets a little bit funky. So either they tokenize 49% of it, or you have a smart contract based system where when you buy into the asset, you agree to the property management operating agreement all in one, and then you just vote with your share, right? If you own
Right.
10% of the property, you have 10% of the voting rights, or however that operating agreement is drawn up, and then that the property management is conducted in the same way that it is now on the back end, but on the front end, the LPs have voted on like who the GP uses
Right.
for
You get a
management.
say in the asset when you're looking at it from that direction versus doing it as a REIT. Because as a REIT, you're just a paper holder of some company essentially. But when you're actually owning a token of a property, you have some say based on the operating agreement, but you would have some say on maybe how the asset's handled and managed.
Yeah,
Uh,
different investors or different companies are going to wrap up those operating agreements in different ways. So
right.
maybe in some options you don't have any say, but that's just going to be priced into the token, right?
Right.
Like if that's
How much
less
it's worth or
attractive,
cost.
then maybe
Yeah.
that's a 2% cheaper token.
Right, exactly. So kind of last thing on this, but if you were talking to real estate professionals or realtors, mortgage people, title, what would you say they need to be doing at this point to kind of prepare themselves or be familiar with what's coming? Because again, one of the things that you guys spend the most time doing, which it sounds like you're doing it in the right place because you're educating the politicians that are making the decisions, which is where it needs to happen first. But then when you get down to the general consumer or just the professional in the industry, what would you tell them to be paying attention to, or how would they go about, trying to learn, or what should they get familiar with, to make sure that they're ready to be operating in this market in the future?
I would say, and I need to do this myself, which is just be read up on the different experimentation that's taking place in the marketplace, right? Look and see what your peers are doing. Not necessarily what I'm saying, but like what are the innovative companies that are tokenizing assets? What are their lessons learned, right? What does Red Swan learn? What does Market Space Capital learn? What does Vertolo learn as a registered transfer agent? They're not tokenizing, but they're actually helping these companies, these funds, with their cap table management. So what are the lessons learned? Where are we going to actually achieve this vision of liquidity and visibility and like public market liquidity for real estate assets is not going to just pop up out of nowhere, and no one's going to build that overnight. I would just say learn from all of the pilots that are going on right now, and be prepared to take your company, learn from others, take them in that direction, increase your market share, and be ready to take advantage of more eyeballs, more business development opportunities, growing your portfolio based upon these trends, because it's very similar to how retail businesses were like in the 90s, right? There was a lot of great retail businesses in the 90s that struggled in the e-commerce transition.
Yeah.
Now, many of them remained large, some of them went bankrupt, but many of them remained large entities. But there's ones that really dominated that e-commerce transition, and there's ones that didn't.
Yeah.
And so I think there'll be real estate companies that dominate the transition to tokenization and greater liquidity and more transparency. And there'll be ones that want to stick their heads in the sand and don't want to do anything. So
Yeah, well, I mean, from a mortgage point of view, I think whenever where it's going to hit us first, I think is, and it's already starting to some extent, is on the secondary side, where the loans that we're taking and packaging up and selling to investors and purchasing, just the rails like you're talking about of being able to transfer assets from one, or a note, whatever in this case, from one bank to another in a quick, inexpensive fashion, which the sooner that companies get on board with that, the cost of operating go down, and then therefore, ideally the cost to some degree gets passed to the consumer, because whoever can do things the fastest and the cheapest is going to have an advantage in the market. And then on the real estate side, I've heard of a few things, but I haven't really seen much yet because, again, the regulation side of it. But there is some work being done with like real estate contracts themselves, being converted into smart contracts, and also being held on the blockchain itself, being recorded that way. Now, again, these are all like you said, running alongside with what they have to do on the regulatory end right now. But there are some things that are going to start, I think, bleeding into our market a little bit the next year or so, or no, not year, next 5 years or so.
Yeah.
That it may happen faster than we think. I don't know. These things kind of move quickly sometimes, as long as you don't have the regulation side to get past. But before we go, wanted to ask you about the blockchain summit, because that is coming up soon, and it's here in the Metroplex. So tell us a little bit about that. Let me know, what's going on there, how we get tickets, who are all the speakers. I mean, in the past you've had Andrew Yang and Ted Cruz and, all kinds of folks at this. So, and did I see that you just changed the name to the Global Summit or something? To explain that.
Yeah, we did. So it's been the Texas Blockchain Summit the last couple of years. This is the name change this year is the North American Blockchain Summit. So we're partnering with, yeah, we're expanding, partnering. We've always had an audience from across the country, and so it just made sense to change the name. And we're partnering with other state associations from across the country for this event. So it's November 15th through 17th. We will have some tokenization of real world assets conversations and panels going on, and some sponsors in that arena. We have speakers, elected officials from Texas and from across the country. Congresswoman Van Dyne will be there. Congressman Warren Davidson, who's a big advocate for digital assets. Senator Cruz, as you mentioned, has come every year. He'll be there again this year. Senator Lummis from Wyoming, Senator Wyden from Oregon, who chairs Senate Finance. He's a Democrat advocate for the space, so we try to stay bipartisan and grab elected officials from both sides of the aisle. And then a lot of industry leaders, a lot of executives from finance, from capital allocator perspective, from Bitcoin mining world, exchanges like Coinbase. Coinbase will be there. They're a sponsor. And so we're really excited about this event. On that Wednesday, we're going to have continuing education workshops for professionals, right? Accountants, lawyers, bankers, energy professionals, registered investment advisors. So you name it, continuing education options. For all of those, except for the banking panel may or may not have continuing ed. It may just be workshops, because it's difficult to get those hours accredited.
Yep.
But all the other panels, those will be accredited. So,
This year's going to be a big year for crypto in politics, especially, I feel like, because I think I just saw either yesterday or the day before, was it the House that passed or maybe it was the House Republicans, or it was a committee. I get lost in all the minutia of it, but that put through a ban on CBDCs. Now, obviously, it's got to go through all the other places to get passed, but can you explain that? What happened there?
Yeah, so the House Financial Services Committee has been doing a great job. They passed the FIT Act, which is a market structure bill for cryptocurrencies and digital assets, out of that committee a few weeks ago. And then you're right, 2 days ago, the ban on central bank digital currencies, which was championed by Representative Emmer, who's the majority whip in the House. That both of those bills will struggle in the Senate, unfortunately. The Senate banking chairman is Sherrod Brown from Ohio, and there are allies on the Democratic side for this, like Senator Wyden and others, but Sherrod Brown is not one of those Democratic allies. So he is likely to be a real stumbling block for those pieces of legislation to get passed in the Senate. But one day they'll get through, whether that's because there's a change in Senate leadership or whatever the reason. I mean,
Just have to.
It'll get through eventually. We're not sure how, but whether that's in this Congress or the next, we do expect some movement on the federal level.
So then my last question to you is: so you're on the, talking to senators, talking to congressmen, you're talking to state legislators. When are you going to throw your hat in the political arena? Is that anything in the near future?
No, certainly not. Yeah,
No?
I've got three young kids all under the age of 8, so will not be throwing my hat in the ring just because I'm with them so much. I see how much time they put in. They're just always going, always at events, always out there in the community, and I just don't have that kind of bandwidth right now.
Yeah, you got too much advocacy on your part. Well, I'm thrilled, and being obviously a Texan and living here, and having somebody like you and the Blockchain Council be out there really trying to make Texas at the forefront of all this, I think is great. With all the great things that comes along with our state, the idea that most of us hold, where the freedom of what we can do with our money, with our voices, with our bodies, with everything that we have the ability to decide on. It's great to see groups like you guys really out there advocating for this technology that is going to revolutionize how we do everything. I made a video about this the other day. Just, it's like the .com era back in the 90s. There was a clip from, I think it was like Bryant Gumbel, and who was trying to describe the @ sign, for email, and this was like in 1995, and he couldn't even really, he was like, what's that called? How do we even describe that? And here we fast forward, 25 years later, and our entire way of life has changed. So I do think that this is going to have that kind of impact. And I think the more people that understand it, and the more people that come familiar with it and don't get lost in the Sam Bankman-Frieds of the world and the crypto bros of, the Dogecoins and all the stuff that goes along with that. But when you really look at what the technology is and what it represents and what it can do for security, for transparency, all those types of things. Imagine if we had the federal budget on the blockchain and how they spent their money. That'd be nice, right? It'd be nice to see where all that money went. So I really appreciate you coming on and spending some time with me, going through all this. I think it's great what you guys are doing, and I hope you continue to do it. Keep pushing out there. And I know it takes up a lot of your time, and having young kids really makes it a stretch to get away from time to time. But I'm glad that you're out there fighting for everybody, and I really appreciate you coming on board and talking to me today.
Yeah, thanks for having me, Mike. It's fun.
All right, guys, that's it for today. We'll be back next week. I'll be talking to another local realtor to tell us about how the market's actually treating her, because as everybody likes to think that everything's going great, sometimes it's a little bit of a struggle. So will be great to hear from her. But thank you again, Lee, for joining me, and I'll let you get back to your day. We'll see you guys next week.